Hello, I'm Jared Nelson, and welcome to Pros and Cons, the show where we take you through the risks and opportunities behind the trending ideas in the market. It was pure drama in Wall Street last week. We can only say, wow. GameStop, Reddit, Robinhood, and all those tweets sniping across cyberspace from all walks of life. Who needs a cinema when we have GameStop? It even made Apple's record results look, well, kind of boring. And then we have Elon Musk's new Twitter profile, Bitcoin. That word single-handedly set fire to Bitcoin prices. In a matter of hours, Bitcoin rocketed from $32,000 to $38,000. The rally there sent other cryptocurrencies higher too, such as Dogecoin. However, Bitcoin's upswing did not last. Dragged down by moderately bearish sentiment in the stock market, Bitcoin traders chose to bag gains. At this point, we have to ask, is the stock market about to correct further, or will it steady around current levels? The Dow Industrials Index is trying to stay north of 30,000, but it will not be easy. Bearish investors think the growing prowess of retail investors is a sign of late-stage market bubble. It resembles those day traders in the 90s. Optimistic investors, however, will point out that as long as the Fed is in an accommodative mode, asset prices will not correct too much. The long-term price trend for many stocks remains bullish. If that is the case, where would you invest now? One idea, a very speculative idea, is to buy crypto-related stocks. A crypto miner is a company that mines Bitcoin for profit. This sector includes Bitcoin miners such as Riot Blockchain and Marathon Patent, and in the near future, crypto exchanges like Coinbase, which is set for an IPO soon. This suggestion is based on a few observations and is corroborated by data from Trackstar IQ, our proprietary search tracking tool, which shows that Bitcoin remains the most widely researched currency amongst institutional investors over the past week. The first is that Bitcoin prices are in a long-term uptrend. Yes, prices have corrected sharply from its all-time highs, but support buying is emerging at $30,000. Last week's rally took prices near $40,000 again, and a new high later this year is a distinct possibility. The second reason is that institutional investors are eyeing Bitcoin with great interest now. Some have already bought Bitcoin, such as MicroStrategy. Others are looking at how to join the crypto market. This is why the market was so excited about Elon Musk's tweet. The bulls suspected that he may load some of Tesla's treasury reserve into Bitcoin, just as Square did last year. Yes, again, this is a speculative suggestion, but the fact remains that many institutional investors are exploring the sector. It is a clear sign that the buying pool is growing larger. The third reason is the GME saga. As the battle there winds to a close, actors are drawing lessons from it. On one side, institutional short sellers will all be scrutinizing their portfolios. They do not want to be caught out like Melvin Capital. Many are already scaling back their short positions. On the other side, the more diverse retail groups will decide that they do not want to be blocked from the market again by the likes of Robinhood. A partial shift to decentralized exchanges is one possibility. This benefits crypto markets, and that, in return, will lift crypto stocks. Of course, buying crypto equities now is a high-risk bet. The stock market may go into a correction from here for the next few months. These speculative and high-beta stocks may underperform. Remember that these stocks have already rallied significantly from their November lows. The other price risk comes from Bitcoin itself. A souring sentiment there may hammer Bitcoin and drag crypto stocks lower. On a really bad day, when both the stock market and Bitcoin go down together, imagine the downward pressure on Bitcoin stocks. The last risk is that these crypto stocks may not track Bitcoin prices exactly. The correlation may break down just when you need them. That is, Bitcoin up, stocks down. Of course, instead of buying one or two crypto stocks, you may diversify by buying a portfolio of stocks via an exchange-traded fund. One possibility is the Amplify Transformational Data Sharing ETF with the ticker BLOCK. It holds a portfolio of crypto and blockchain-related stocks and has $530 million assets under management. So, let's recap. Given the strong rally in Bitcoin and small-cap stocks, crypto stocks are increasingly adopting the YOLO profile. YOLO stands for You Only Live Once. YOLO stocks typically have high expected returns and very high downside volatility. As famed value investor Bill Miller described Bitcoin recently, you have to expect that it's going to be very, very volatile. If you can't take the volatility, you probably shouldn't own it. But its volatility is the price you pay for its performance. And remember, when buying crypto stocks, only risk money you can afford to lose. That's all we have time for this week. To find out more about our Trackstar IQ data, sign up to our free newsletter at investingchannel.com/Trackstar. As always, when trading in speculative markets like cryptocurrencies, make sure you do your own due diligence before making any investment decisions.